Alrighty, Doc, you're from North America. It's Happy Hump Day. It's Wednesday. It's the middle of the week already. The summer months fly by, and the action in the markets get sloppy and crazy, and thin, I guess you could say. And that's where we are. And you see the dollar index. They've been climbing and climbing and climbing. Currencies always seem to be more on target than anything else. In other words, ruble wouldn't be trading at 102, and now it's down to like 90 something, but still, it wouldn't be up in the 90s or 85s or 105s. It wouldn't be up that high if it wasn't for the market participants, the ones that are actually moving goods from one country to another, looking for the best deal. They reflect the value of a currency. A lot of times, it's very rare for a currency to be wrong. When the Swiss went from 90 or 89 to 101, money knew there was a problem with Credit Suisse, and that the government was going to have to take care of it, and so they put what we refer to in trading as a haircut. They decreased the price there. Hey Janos, hey Robin, could you give an update on euro? Yeah, sure. Let's take a look at it. That heart drives me crazy, so let me just do this. I'm just going to go like 1 and then enter. Now I can see. Update to euro and yen. Your dollar euro. Yes. Let's take a look at it. Let's jump over to that. That's our new platform there. So I thought I got a screen for that too. At the same time, we bounce back and forth. And let's go to the euro. And last I saw, the euro is moving down. There it is right there. So it went into the sell yesterday. Let's put that line in there. There it is. Went into the sell yesterday. It's in a weekly sell for 3 weeks. And you can see the fast algorithm is underneath and not really, not lifting up much. I'm not surprised. We talked about it up in this area here as it was breaking down, and the fast broke down up in this area right here. We talked about the idea of challenging the 108 area, and here we are. We're at the 108 area now. So that's not, excuse me, that's not much of a surprise. So what it says to me is that, just like when we look at J4X, we'll go like that. There's J4X, and it's showing, this monstrous move from the 99s back up to, and we thought we'd get back up to the 103.5 to 104 area, and we have. And let me just tighten that up a little bit. We were expecting to see this be challenged, and the bottoms in this area to be challenged. So, we figured landing in this target zone right in there, and that's exactly what's happening on the daily basis. You can see the daily is trading at 81.3, and the daily slow is trading at 76.6, basically. So still some strength coming in here. But, there's the Jackson Hole thing is going to happen at the end of this week or going to next week, I guess it is. And so, they're thinking that, he's going to do a very short speech like he did last year when everybody thought it was going to be something intense. It was like 9 minutes long, and he'll probably be pretty clear about where he stands. I think they want to swallow the pain now. And markets are anticipating lower rates next year. And so Yana says, so weekly sell for 3 weeks? Yeah, daily sell from yesterday. Exactly. The pressure's on. Over on our new platform, we need to change the scaling. We're having a problem with scaling on a lot of products. So you can see, like, right here we have the cable. Where's the cable at? Let's go to the cable. There's the cable right there. And you can see that it's making a wild dip. Let's see if we can go back to it. Like there it is. And if I go like this, just tightening it up right like that, you see that dip that's breaking down now. Even the cable's joining in, whereas the cable is also 4 weeks in a sell there. And the fast has been in there for 6 weeks now. And we go over to here. You can see that pressure it's hitting all the currencies. There it is right there. Same situation. the fast has broken back. Oh, let's fix it. Here we go, like this. You can see the fast has broken down, and you can see now this daily is making a nice deep dive. It closed in a daily sell yesterday right there. So this is the second day also. Only difference is that they're really pouncing hard on the. Let's put it in the right spot. They're really pouncing hard on the cable, but all the currency pairs are feeling the pain. You can see the dollar gaining against everything, everything. Let's see. All right. Let's see. But today's sell-off was caused by the bad European data, right? Okay. And the system turned into blanket yesterday, namely if it foresaw this. Yes. Yeah, it picked up on it. And usually what happens is that the insiders who know it's coming will take advantage of it at the last moment. In other words, before the rest. In other words, it's always, the old Wall Street adage, buy on rumor, sell on news, or in the case if you think the rumor is something that's going to go down, short on rumor, cover on news. That's usually the rhythm of it all in the end. So that's where we kind of stand at the moment. We see it as a lot of pressure. And the end result is, as you see on the there's the daily there on the dollar index, and it's just been climbing and climbing and climbing. Now let's take a look at the euro in there, the same situation. Euro right there, and it's been gliding down on a day-to-day basis. Lots of pressure. And let's put it back up over here. You got that consistent. We got one bounce up. We got a high yesterday, and by the end of the day, it went into the sell. So pretty much both of them, in particular, the euro has been in a sell pretty much. Was it the 2, 3, 4, 5, 6, 7, 8, 9? Is that right? 2, 4, 6, 8, 9 days in a sell. Went into a buy for a day, made a new high, like a 3-day high or a 4-day high yesterday. Closes in a sell, and we're back in the sell again. But we've been pretty much in a daily sell throughout this whole move. You can see that right there. Let's see. Let me just put a 1 in there again so I can get rid of that heart. There we are. The system turned into a sell yesterday, namely it foresaw this. It foresaw it back further than this. Remember, we're in a daily sell from here. We just went into a daily buy one day. They tried to dead cat bounce it, and by the end of the day, they're back into the sell again. The fast stochastic's been or in this case here, the fast algorithm is basically in a sell since back in here. And you can see overall this topping action, we've been in a daily sell really, which is pretty incredible when you think about it. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, and then 2 days in a buy, and then another 9 days, 13. So 13 and 9 is 21. So you got 21 days out of the 23 days since this top up in here. We've been in a daily sell for 21 of the 23 days. And then we go into, so you can say here, 20, and then you go into a buy again for 1 day, and it fails again. So the pressure's been on. They're not letting go. So it's more than just, today might be just economic news. Yesterday, let's put it this way, over the last month, the euro has been feeling the pressure. And, when we go back to, well, you can see it here on J4X. It's just been consistently long pressure with that top right there. It's just been consistent. It's not letting go. And it's, it just does not want to give up. It really doesn't. And I guess, what it really comes down to is that the the pressure on the product itself has been really consistent. There's a lot of you know a lack of, as I've been saying to Robin, all we see is a lack of buyers, really, more than anything else. It's not that there's a lot of sellers, it's just a lack of buyers. It has gone down 4% since July 18th. Yeah, that makes sense. We've seen the Swiss. The Swiss has done the same thing. It's made that turn. So in other words, it's unison. It's maybe not as aggressive. It's gone from the high 85s to the mid 88s. But that's still a pretty good move. That's you're looking at a 3+% also. It's systemic across all the currencies. We're seeing every currency have its problems. Hell, we even think about it. We saw the ruble get up to 102. Let's go find that thing. We don't have the ruble's not on many things anymore. You can't see it most times. Is it even giving it to me today? Oh, there it is. Okay. I mean, here's the ruble on our platform. Right there. I mean, you can see it was losing since July. It was doing the same thing. It was losing against the dollar. And it ran, matter of fact, that's an interesting peak. 7 days ago, 8 days ago, it peaked out at 102. And then, they raised rates 12.5% in Moscow, the central bank there. And so interest rates are at 12.5%. Boy, that really tells you something, doesn't it? In a positive way, not a negative way. Janos, I always try to. I don't want to see the Russian Federation falling apart. I just would like to see a legitimate marketplace there. In other words, right now we still have the Wild West going on from the 90s. It's been 25 years now or something like that, almost 30 years. It's still ugly and crazy going on since the collapse of the Soviet Union. And so, it would be nice to see with all those resources and the educated workforce that they, get a constitution or something that, starts to reel in the cowboy environment that's going on over there. The thug, I don't want to call it thug. It reminds me of the Wild West in the United States back in the 1870s and 1880s and that type of thing, in the 1850s. It's more like the Wild West. It's growing pains. That's all it really is. And so you see here they jam that thing up to 102, and then they raise rates. And what I'm thinking is what catches my eye more than anything else is they didn't have to raise it to like 25% or something like that, or 30%. They just raised it to 12% or 12.5%. That's not the most outrageous, because when we go over to the bonds, let's do this. When we go over to the bonds, let's see if we can find it. Go like this. When you go to the bonds globally, okay, there's countries out there at 8-9% now that are respectable countries that have the rule of law. They're just kind of more socialist. That's all. But let's find one of them, or let's take a look at a few of them. In the case of the bonds, on a global basis, like the UK. You see the UK. We're in the United States. We're in the 5s. You see same thing with the UK in the 5s. So what's 12.5 when you got a ugly economy? Germany, is in the 3s. It's kind of, it's they've been that way, because of the currency and all like that, or their strength. Italy, in the 3s and the 4s. There's 4s there further out. Let's see. I know I've seen some. Let's see what France is. I've seen like Australia and stuff like that. I think they're in the 8s, and so forth. You can see here France in the 3s and the 2s. Japan is at minus still. They got minus. Or is it the 3 month is at minus still, and then the best you can get is a 30-year at like 1 and 3. 169, and then let's see, where is it at? I just want to show you Australia. I think Australia has some up higher. I thought they had the 8s. I could have sworn I saw, one of the. I saw somebody in the in the Commonwealth or something like that, up in the eights. And I thought to myself, yeah, that's pretty hefty. You can see here there's Canada in the fives. So I mean, if oh, maybe it's Brazil. Brazil might have something crazy like that. Let's see, where's Brazil? Yeah, Brazil's like, there's 9 month is trading at 11, almost 12, and Russia is doing the same thing. I mean, Brazil's not at war. They're just I guess you could say Brazil's at war with itself. You know, uh, it's not a bad number when you really think about it. 12.5%. I'm sure that that's the best of the best that gets that. I mean, other people are paying 20 and 30. We know that part. Let's see. Let me. Wow. Okay, you had a lot to say. Okay, but today's sell-off caused by bad European data. Right. The system turned into a sell yesterday. Namely, it foresaw it. Okay. Equity markets and all. Could you look at the NVDA? Yeah, let's get NVDA up there too. But yeah, I mean, I think there's a lot to be said about the rates itself. I mean, everybody's up pretty firm, and it's been a wild year. Here's NVDA on our platform right there. There's NVDA. It's really choppy. It's in a weekly sell, NVDA, for weeks now, and the product has been, up into the 480, has fallen all the way down to the almost the 403 area, and now we're getting into some daily buys. Now that's trying to project. Is that yesterday? That's yesterday. So what did he do yesterday? Let's get that up on the screen here. NVDA right here on our multi-chart platform, and let's move over to that. Where is it at? Right there. There we are. Same thing going on today. There's pressure on the product. It went into the sell and closed in a buy right here. Then they lifted it yesterday. And let's see right there. Let's put that in there. And now it's trying to break down today. I understand. Let's take a look at, and you can see the weekly is trying to get closer and turn up. You can see that right there. Matter of fact, over on this, you can see, let's go back over to our new platform. Right there, you can see it. It's trying to turn up. Matter of fact, the fast algorithm is already through the zero line on the weekly, whereas the slow is way buried. Now, let's take a look. Let me take a look at the options and see what the pricing is for the options at the moment. Because I heard someone talking this morning about that. Equity markets are looking on their earnings upcoming this week. Yep, exactly. Massive move expected. They are set to show what the AI mania has some, if it has some footing. Yeah, I agree on everything you said there. It's exactly what they're looking at. They're staring at that AI. Someone was comparing it this morning to Meta, with the problem in Meta. And then Nomura, the brokerage house out of Japan, on Monday, said that they were, and I mentioned it here yesterday, or I mentioned it Monday, that they think that there's a lot of people in the hedge fund industry and the marketplace think that the bottom this year is August, not September or October. They're actually thinking it's August. For some reason, they think that anticipation of the elections, possibly. I mean, near the money, both puts and calls. So let me see. Yeah, let me look at the straddle is. Let me just take a quick look at the straddle. And let's see, MVDA. So the options, and the answer to it is, so the 2-day option, they expire very soon. Let's see, where's it at? All right, so where's the stock at? Stock's at, let me see where the stock's at. 60. All right, so the 60 call is trading at basically it's 23, about 23.65 at 23.80. It's nice and tight actually. And this, I want that one instead. There we are. Okay, let's get rid of that. All right, and let's move that out of here. Cut or delete, either one. Cut. Delete row. There we are. No, not all of them. It just did it to me. What the heck? And anyway, it seems to be set up. MVDA looks like it's set up in the $40 swing, almost a $50 swing. That's what it's looking like. Let me just get them back up on the screen here again. There we are. Okay, now let's close that. All right, yeah. So the straddle, the 460 straddle, is basically at $50. All right, so it's basically saying that, 510 to 410. That's what they're saying the swing could be. Let's see. I mean, near the money. Yeah. The bottom line that people might want to hear. What is your opinion on system showing on MVDA bounce up or down? Well, right now the options are telling me that it has a potential for anywhere from about a $55 to $60. Let me go back a little bit. Some of these big names of the last 6 months, like Meta and so forth, the options have been a little weak on predicting. They've been maybe 5% off, which is not bad. In other words, like Meta, they thought stock would drop like 35. It dropped like 45. In that case, there was over 20%. But most of them have been like Apple and so forth. The option spreads have been just a little thin, or right on the numbers, right around it. So it's not that bad. So in this case here, if it's the options, the calls are being quoted at basically at 23.70 and change, and the puts are being quoted at 26.60. So basically $50. So I would say that you'll probably see anywhere from a $50 to $60 move, more like a $60 move out of it. So in other words, we might go like the 5. We're at 4. We're at 4. As you can see, let's move this over again and minimize that. All right, let's go over to here. And so as you can see right here, the stock is trading at 459.40 as we speak. That's where it's at, right there. And so the odds are is that it's going to go to at least 510 to 520 on the upside if they get what they want, which is hard to believe, but they will, because remember, there's a lot of money out. Matter of fact, there's a couple of big names out there that are basically saying that it's time to put risk on. In other words, they're saying start buying. That's what they're saying. Might not be the bottom, but start buying. That's what they're saying. And they, classic hedge fund gobbledygook words, like leaking for something that's going down, or sticky when something refuses to move. In this case here, they're saying it's time to take risk. I gotta laugh with some of these expressions in the hedge fund world, in the financial world. So anyway, there's money out there saying it's time to take risk. And they're also saying, like I said a few minutes ago, they're actually thinking that the lows are going to be set at the end of the summer now, or now. They're setting the lows. And then Nomura comes in and says the window is closing on undervalued buying. That's what they can't they just say buy? Hey, it's cheap. Buy. No. The window is closing. Nomura said that. The window is closing on undervalued buying. How about just saying it's cheap, buy? Honestly. Let's see what Yana said now. Bottom line, people might want to hear what. Okay, I gave you the opinion there. Someone bought a bunch of calls at 510 by paying even above the ask price. Let me take a look at it. They could have been putting on bull spreads too. That's not a far-fetched thing to do. We could look and see what that is too. And what else is there to be said? Just got a great. So that is really where it's at. Now let me go take a look at which spread went off. You said the 510. Someone bought a bunch of the calls at 510, paying even above the ask price. Another aspect that I might suggest everyone look at. AMD is a much cheaper stock, but as highly correlated with the MDD. Yeah, they got that big chip too that has been unpopular for a long time and is now a competitor in that industry. We might want to look at. We got to figure a way to get rid of that heart. Look at that too. Yeah. Now let's find AMD. I want to look at it. I want to look at the options. Let me go back to the options real quick and see if I see something that makes any sense out of it all. NVDA. I want to see the 510 calls, because one of those plays. I mean, look at the price. The price is the 510 calls trading at $8. That's an awful expensive thing. Now you can go and buy. What's interesting is you could go and buy like the 507 and a half and sell the 8 for about 60 cents. And so you got 60 cents to make $2 and $1.80. 90 cents. I'm sorry. 60 cents risk on a $1.90 win. So if the product goes to 510, that's pretty good there. Matter of fact, even it's all right. The 505 and sell the 110 for $1, and you pay $1 for it, and you can make $4. So there's a lot of 4-to-1s and 5-to-1s. So if someone bought, if they bought the 510s, you're saying, and stepped up, it could be a straddle. One thing's for sure. If this thing falls apart, imagine if you bought the 510 calls at $8, right? And you're short the stock, and you do it as a simple ratio, let's say 2-to-1, 3-to-1, something like that. So basically, you might be investing $24, and if this thing falls apart down to 500, you made over 50%. It could be a straddle too. They could be selling. Remember, for every buyer, there's a seller. So someone might have been out there trying to sell it at one point. And then, and if you go out into a trading arena like that and you try and you say, okay, I want to buy, I don't know, or I want to, someone wants to buy X amount, some massive amount, like, $4 million worth. Sometimes people will actually pay up for that. In other words, they will do that just to get into that position, because you're talking about there could be a 20% difference in what the option spreads are reflecting. So it's going to be interesting, and that's tonight too. Can you look at what our algos? Oh yeah. Let's get over to AMD. Let's put that down. That goes there. Give you the first look on our platform. There's AMD. Let me go hunt it down on the. There's the AMD. You can see it's been in a weekly sell for 2, 3, 4, 5 weeks, right there. And then let's get it up on the other platform again, the multi-chart platform. Let's see, where's it at? Activate. All right. Paste. All right. Here comes AMD on the other system now. Yeah, I think it's like 100 something in a share, right? 105, something like that. Instrument AMD. There we go. Yeah, it's 105.72 as we speak. And close. Now let's go take a look at that. And there's AMD. And so you can see here, it was in a buy for the last 2 days off of this one, and it's now flirting with the sell. And I imagine this is going to get swayed in some ways the same way NVDA is. It's, in other words, if the numbers are really good, then they're going to probably buy more AMD, saying that the demand is that high. If it's not, then they'll sell it, saying, okay, there's going to be pressure. Let me see what they're pricing. Let's see how they're pricing the options in AMD. Well, one thing's for sure. AMD's been a real sleeper for a long time. There's no doubt about that. I mean, decades. Every time someone wants to recommend AMD, it's like, it's it doesn't climb for 6 months. It's a very lethargic product. Everybody says, it's got the great chip. I think at one point, as it was doing blockchain, everybody was jumping on it, and then all of a sudden it died again. So in this case here, with the stock at 105, let's see what the 105. Now where are the options at? 2-day options. What is this? There's the delta. They're not really reflecting. Okay, let's put this in there. That and that. All right, so they're only pricing. All right, let's put it in perspective. Basically, it's at $5. All right, the stock is 105 compared to 460. So now multiply the VIG on that. The difference. So you would divide 105 into 460, which comes out to be 4.2. I guess it's 4.2. So now multiply 4.2 to the 5, and that's 20. And so because they're saying, in other words, they're not pricing in the $50. In other words, they're only pricing in $20 or $22, something like that. They're pricing in $22. So they're not pricing in as much of an action to the AMD as they are into the NVDA. And again, that's, like I said, there will be some buying if the numbers are really, really good and they show that inventories are being swallowed up. Then they're going to rush for AMD. And so, basically, it's kind of interesting. They're pricing it here. Let me show you something which is interesting here. Okay. Look at this up here. The thing was up in the 130s. Okay. Now let's go take a look at NVDA again. And this product, where is it? Didn't it get up to 500 at one point? I thought it did. Okay, so this is the all-time high. We're in the all-time high territory. Okay. All right, so that's interesting. Is that AMD needs to be up in the 130s to be able to compare it 1-to-1 when it comes to demand. And it's not. It's $25 off. It's it's like 20 some odd percent underneath. Whereas NVDA is hovering at all-time highs. And so they're pricing in. So in other words, you can see here, the 120 area, they're not even pricing the options. What's interesting is they're not even pricing the options for more than the 110 area. So they're not expecting any real action. Now, there are arbitrageurs out there that would be buying this and selling the NVDA spreads. So in other words, you buy the AMD spreads cheaper because it's 50% discount, good 50% discount a haircut. And then you go and sell the NVDA straddle. Buy the AMD straddle and sell the NVDA straddle. And you do it as a VIG, so it would be 4-to-1. Games like that are played when you have all kinds of capital. Matter of fact, we'll watch to see what that does. Yeah, AMD is in a weekly sell also, just like the way NVDA is. You can see that there for, what is that, going on the fourth week now. Is it there too? Minus. Yeah. So 4 weeks. It's been in a sell since right there. Matter of fact, it's been in a sell since the 130 area. It went into the sell that at the next week. The fast was in it at the top. The fast went into a sell right here, and the slow joined in basically two and a half weeks later in the 120s but the fast went in there in the 130s. And you would think that the options would be priced. In other words, you would think that you would price the options. We're going to watch both and see what happens. But you would think that there'd be an arbitrage in there. I guess analysts who understand the difference between AMD and NVDA, are not doing anything. Maybe maybe they don't see the same correlation. So, but that's been a heck of a move. When we go back and look at NVDA and then we look at, let's go find it here. We've really drifted from the currencies. I'm not complaining about it. I like doing that stuff. Yeah, see, back in October, the product was trading at 55, and it climbed to 130. Let's see, 132. So, it doubled and then even gained even more than that, almost tripled. It was very wild. Now, let's go take a look at NVDA in the same time period and see what the money was thinking out of it all. So there is, what was the other one? AMD. Let me just double check again what the time period was. It July? No, okay, so this was that low of October of last year. Okay. Is that right? Yeah, the October of last year. So October of last year, it was at 55. So let's see NVDA of October of last year. And see if there's a correlation to it. Let's see if we can get back further. Format instrument. Settings. Let's see. Cancel. Let's do it again. And let's go back 900 days and see what that shows in October. So in October of last year, this was trading at $100, and okay, I see the difference now. All right, so at the same time that AMD was trading at 55, that ran to 130, this product ran to 460 in the same time period. So it quadrupled and then some. So instead of, it went up to 1.7 in AMD, and it went up 4.1, almost 4, in between 4.1 and 4.2 in NVDA. So it's a 4-to-1 ratio. So they're probably not so fast to buy an AMD. If it had been correlated the same, then fast money, well, that's what we call like short-term money, intraday or daily or position trading that trades for a couple of days. We call it fast money, and in the hedge fund industry. And so fast money is saying that the best we can expect out of AMD is maybe 111. Whereas in AMD they're saying the best we can see is possibly 505. It'll go up 50 some odd dollars versus just $5 and change. How's that? Is that a good analysis? For AMD is in a weekly buy and sell. Okay, I have a sense that Mom and Pops are doing the NVDA trading, but I don't, but I need to. Let's see. Got to get rid of that heart. Can't see what the word is. Okay. I have moms and pops are doing it, but MVDA trading, but I need data for it. What? Let's see. What about the downside for both of them? Well, again, they're saying $50. So in other words, the stock could be at 410 today or 405, depending on how the earnings look. If it's bad, they can get even crazier because remember, this thing went from 100 to 450, or $460. So that's why they're not doing an ARB on the AMD, because the ratio is nowhere near. It's literally 50%, more than 50% less. It's like 67%, 66. So it's only correlating at most in it's percentage-wise correlation. It's thin. There's a Drexel Burnham Lambert. I'm going to bring up the old name. Drexel was a great pairs trader with a VIG. They really, my friend Louis there, who's passed on now, he helped develop their pairs trading at Drexel Burnham Lambert when Drexel was one of the top companies in the country. That's Michael Milken and all that stuff, And they were the ones that invented junk bonds. Drexel Burnham Lambert, when the economy got going in the 80s, they invented junk bonds. Everybody said it was a ridiculous thing to do, but here they are today, still trading. It's a good tool. So, everybody was like, they're junk. No one will buy them. Guess what? A lot of people buy them. It's got a good yield. You can put options on it. You can hedge it. So, but yeah, that would be my friend Louis there, who's passed on years ago now. Basically helped to develop the pairs trade and the VIG pairs trade in particular. Good old Louis. Haven't thought about him in a long time. All right. Let's see what else we got. It looks symmetrical. The earnings will give direction, and stocks will pop pre-market. Look, I see buying. I see. They're definitely trying to buy. There's no doubt about that. I'm seeing buying going on. Robin and I talk about it every day. It's choppy as all get out. But right now, let me just show you one of my charts that I like. I really like looking at. This is the SPY. Okay, everybody's comfortable seeing this chart of mine. Okay, this is my classic algorithms, the whole bit. Now let me just show you a little bit more exotic that I like to look at the same time. And this one here, this is the SPY. Same thing, same chart as the other one. Just I'm doing moving averages of the 3-5. And so what you have is the black is the 5, and the two lines. The histogram is the 5, and the let me just double check where that is. Okay, that's the 5 right there, and the 3 is the yellow and the white lines. They're the lines, and you can see here. The dailies, check this out. You can see it's good for spreads at times. Let me move these things out of the way because they're not adjusted. That one is, I think. Let's see. That one is right there. And then it goes right back into the cell. Right there. No, that's not right. The buy was right there. And it goes into the cell right there, and then it goes back into the buy. Where's it go back into the buy? It goes back into the buy right here. So in other words, with this, it's a little bit spread out. Like it goes into a buy right here, and it goes up and down like everything else, but it doesn't confirm a sell until right here, and then it goes into a buy for 2 days. 2 days. Yeah, 2 days, and then it goes back into the sell right there. And so this is the S&P. When this thing starts to get back into its buy again, and you can see it even Like this one went into a buy here, finally went into the sell there, and within a 1 day, yeah, 1 day, went right back into the buy again, and was in a buy for all the way up to here. So this is, and then I'm playing with the weeklies the same way. I'm looking at a bunch of my algorithms banging against each other. That's the old doc, when we talked about algo wars. Remember, Janos, many years ago, I used to refer to it as algo wars, algorithms battling against each other. Remember, was it Geta? She was always like, why do you have to talk war? It's like they're just fighting with each other. No, we want peace. The earnings will give us you lost me there. Your signs are showing in this one what it is. It's stretched out. What it is that that's the buy when both the black and the white are in a buy. But when one of them is dipped and the other one is not, it stays in its trend. So like right here, still in a buy. Still in a buy. Still in a buy because the black now is above and the white is below. Still in a buy. They both have to be lined up on the same side. And then you see here, below, the black is above. Here, the black is below, the white is above. Until right there. Matter of fact, it's interesting. That top, it gives us a sell signal. And then you can see like here, it's still in a sell with the black above. All the way to here. It goes into the buy off of that move. And the next day, is it next day or 2 days? 2 days later, it goes back into the sell here. And now it's trying to lift. If we get this white line and the black back up above the zero line, there's a good chance we've seen the bottom. So what it's saying is that we're not there yet. That's what it's saying. We're not there yet. The weekly's saying to us it's not there yet. Okay? So let's find the zero line again for that line there. There it is. So that in many ways smooths out the daily. That's what it does. It smooths out the daily. And I always find that to be very interesting. This way you don't get whipsawed. When you have bull spreads or bear spreads on, this way you're not getting pushed in and out. So in other words, you get long here with an option spread or binary spread, and then it runs up to here. You've rolled it, moved into another one, so forth. You go start breaking down, but it doesn't go into a sell. It sells off. The pressure's on it. You can see all that, but it's still telling you the trend, overall longer-term trend, is up. In essence, it's confirming the weekly. The weekly's in a buy. The daily has broken down on the short term, but it's not telling us that they're going to go back to this area here. And then it finds a way to get lift back up, and 2 weeks later, 2.5 weeks later, really, it finds its way back above those areas, starts to support that, and there's the William O'Neill cup and handle right there. And and he used to say how it takes off. Our math picks that up really well. It's confirming all along: don't sell, don't be short. Be flat, but don't be short. And that's what that's doing. In reality, the best one wins. That is why the Algo War was okay name, but we had competition, so it just turned into trading with you. Well, in the end result, that's exactly. And I was hoping other technicians would come in and fight, battle with me with other algorithms. How many times, notice anytime somebody comes in, I leave the technical tool on the screen for months, and we look at it. But our algorithm beats everybody all the time. So, yeah, I mean that's the game of it all. And that basically is the analysis of AMD and MVDA. Matter of fact, that probably should be the title today for this webinar, right? Does that make sense? That would be the title of it. Yeah, that makes sense. Should we go take a look at the rest of the products now? Go take a run and gun through the currencies and the metals and all, just to give a flavor of what's going on today. We've seen it already on J4X with the dollar is strong. They're not selling the dollar. So, all right, let's take a look at the currencies now. Right there, we saw the euro. The euro is, showing the pressure. Again, Jackson Hole / interest rates / a lot of people are thinking we're going to see 5 3/4, 6. What's his name? Powell is not going to back off. In other words, money is trying to say what a lot of this is starting to show is they're looking at 5 3/4, 6. They really are. All right, here's the cable. You see the same thing. They smacked it on that economic news today that Giannis was talking about. Second day in a sell. It's been in a weekly sell for a bunch of weeks. Fast has been in a weekly sell for almost 5 weeks now. Over there, Swiss. See the Swiss, same thing, leaning up. Not as bad, but still leaning up. In other words, it's losing against the dollar. And it's in a weekly buy for a few weeks. And the fast has been in a weekly buy for 4 weeks. So you see that pressure. Now today they're flirting. You got a green and a red. You can see they're trying to pressure the product. But so far it's stayed in a buy since here, but it hasn't really gone anywhere. The yen. Yen is, they went into the sell. They went into the buy there yesterday. So it's been in the sell. Let's grab this sell. So it went into the sell there. And then it went into the, let's see if I can find another buy without pulling that one. There we go. And then it went into the buy there. And now it's flirting with the sell again. But it's in that weekly buy. So I'm concerned this product's going to find a way to get up to like 150 again. Ever since we got past the 135, it's like, uh-oh, something's wrong. Turkish lira. You see Turkish lira is trying to get back into the sell. The ranges are, really wide. It closed in a weekly sell last week. Let's put that line in there. I think it did, yeah. That's a sell, right? 0 and 0. Yeah, that's a sell right there. So the pressure is on the Turkish lira. Maybe they want to, and it's not end of the year yet, but, it will be soon. How they size things up at the end of the year. There is, from there, let's look at the peso. Oh, we saw the official news, Janos. Mexican peso says, no thank you, BRICS. They made the announcement yesterday. Not interested in joining the BRICS. That's too bad, because I wanted to put an index together. If they did, it would be a great index, with the Mexican peso, the South African rand, the Indian rupee. They would be like the way the euro, the yen, and the British pound is. That would have been great. I mean, what's interesting is that Mexico's not a commonwealth, but the other two are commonwealths. It's just like the way we have the dollar index. No, England, euro. No, I guess not. Yen is not a commonwealth either. Okay, close enough though. So no Mexican peso, no super brick. I was so psyched on that. Damn, I really love that idea. All right, now from there we go over to the let's go over to the South African rand. We'll look at the metals market real quick, and you can see right there it's going down. We should be seeing gold go up. It should go up, and that's the dollar index running towards the high of the day. And there is gold. It's trying to get into the buy. It was a green and a red yesterday, but today it's jumping through. But our weekly still giving it pressure. The only one that's looking half alive is the silver. Silver has been in a buy for 5 days, and it's trying to get into the weekly buy, and it's Wednesday. So we're starting to see some good stuff there. Mexico is the only one that ain't that bad, although the cartels. Yes, exactly, and that's why I wanted to do a brick index, because if Mexican peso was going to be in the BRICS, then we actually have a foundation for an actual index. Problem is, without Mexican peso, you're left with the rupee and South African rand. That's it. I mean, the yen doesn't trade. The ruby, the ruble, is dead from the neck up. So I mean, you got Brazil that doesn't even. You can't even trade the Brazilian real. Even you guys won't even put a quote up on a Brazilian real. Maybe I'll be able to try to get it on my platform. I've noticed I'm getting the ruble on my platform. We'll have to check that out and see if we get the Brazilian real. Yeah, I mean that's really a major disappointment in my head. Last but not least, let's take a quick look at the energies. There's crude oil. It's backing off in Canada, as we've seen Canada do. It's been roaring up. There's Canada. Look at that. They just keep on going. Something's getting really beat up in Canada. It's not following the oil market anymore. It's just going on one massive rampage. Boy, it could be really tough. Let's take a look at Brent right there. There's Brent. And at the same time, on our platform, let's see if we can get to it. Right there. We can get Brent up there. BZF, there it is. And there's the Brent. I guess we have two of them in there, don't we? Let's try that again. Okay, so it's just BZF. So Brent is starting to back off. We're even flirting with the weekly sell. I think we're doing so. All right, traders, this is Doc from North America. We will be seeing you all again tomorrow, same time, same channel. Hold on, Joe. Happy trails to you until we meet again. Happy trails to you, to all our trading friends. All right, traders, strap it in. It's going to be interesting for MVDA. All right, Europa, Asia, have a good night. Ta-ta for now. Doc,